want to share some insights and opinions on blockchain and its interplay with finance. And by the end of this talk, I promise you that you will understand more on the essence of blockchain, why it has such a big impact on global finance, why the US government tried to regulate it and now is heavily embracing it, why certain projects in blockchain failed and why certain succeeded. During this talk, feel free to interrupt me anytime you want. And I'm CEO of Sparsity. It's an infrastructure and on-chain finance project backed by A16Z. I will introduce more about what we're doing near the end of this talk. The majority of this talk will just be explaining some insights on blockchain as revolving around a few theses. So first, a few little bit about myself. I'm trained as a computer scientist. I graduated from MIT in computer science. I was gold medalist in this competition called International Olympiad in Informatics. I worked in Google, Microsoft, and NVIDIA, Snapchat, building for 1.5 billion users before I joined blockchain. So you can consider me as, spent a lot of time in the traditional software industry. I joined blockchain full-time 4 years ago and I spent a lot of time, the first 2 years of my time in blockchain was all on analyzing blockchain attacks to figure out why certain attacks happen, and also spent a lot of time on compliance, anti-money laundering in blockchain. So I see both the fast, rapidly developing side of blockchain, but also the regulation, or sometimes the lack of regulation side on blockchain, the regulation challenge on blockchain. I also have a lot of expertise in blockchain infrastructure, what's the current infrastructure of blockchain, the past and the future. The sparsity is based on the thesis that blockchain is for the future of finance. And we are actively working with banks to help the banks tap into this mysteriously strong and sometimes hard to grasp new technology. And also we're building the necessary infrastructure when it's needed. Again, we're backed by A16Z and also MIT Harvard Accelerator, etc. So before I dive into blockchain, I want to put this into the historical context that there has been many technological booms around in the history of humankind. There's a railroad, right, steel making, cars, aviation, electricity, and almost all technical advancement goes through this cycle. At the beginning, is utility. People find this is useful, but there's no regulation. People don't know how to regulate electricity when you first come out. How do you regulate that? I mean, even today, not only blockchain, but AI, sometimes you don't know how to regulate it. There's deep fakes online, then what? How do you do it? The AI model is trained from works from artists. How do you make the AI company pay those artists properly? Because sometimes you don't even know how to figure out who contributed what to this model. So at the beginning of the technology, there's always a lot of ambiguity. You don't know how can you properly regulate it. There's not only a lack of motivation, but also a lack of tools. You don't know how to regulate it. But regardless, because there's regulation, because there's utility, there's always a gold rush. People come to build all this railroad, build AI, all of the electricity. But because of a lack of regulations, there's usually catastrophes. There's accidents, there's all these crazy things happening, and then regulation kicks in before it becomes mature. So almost all the technology boom follow this pattern. And blockchain right now is heavily in this catastrophe regulation domain before it becomes more mature to transform the global finance in a way that can really percolate in everybody's daily life. And I would say, this is just a review that for different technology, there is different stages of the different technology, but eventually the different technology will merge into the general human civilization yeah, just the text is already there, and the list goes on and on. There's a lot of going on. So the current two biggest one is definitely AI and blockchain, but there's a few on the horizon, like quantum computing, biomedical engineering, etc. So all of them will go through this channel. It's almost like a person, right? You need to go through adolescence before you become a more mature adult. So now we go into the actually focused on blockchain. So blockchain is remarkable in many different ways. By the way, I think this pattern, one of the things here is also just let people know that there's no such technical boom that is different from all the others. Like, because people always say this time is different. It's this is gonna change human for completely different than the previous technical advances. I don't believe that. I think each of this changed the human civilization completely, but none of them is so big that it overshadows all the others. I mean, this is another thing that's what I see from here. AI is great. It's probably one of the biggest technology advancement. But as someone in technology, I know a lot about AI. I also think like the current AI boom has a limit. It's not gonna completely replace human. That's not possible. So I just like this pattern, when it happens, like everyone go crazy. But afterwards you see, okay, this is useful, very useful. But that's it. Like it has certain limit. I think one number shows that each of this can increase the global GDP by about 2 times, double the global GDP, something like that on average. That's about like a reference number for each of this technical advancement. So going to blockchain, I think there are so many ways to talk about blockchain, which is also why it's hard to talk about. For a very long time, people say blockchain is decentralization because centralized is bad, right? People so blockchain was born out of the 2008 financial crisis. And people at that time blamed that to a lot of centralized, opaque, non-transparent deal making behind the scene, all of that. So this slide, I'm just saying one way to look at blockchain is that it's a global order that does not depend on any government. And this is probably the first in human history, because historically, we always rely on the government as the ultimate source of order. Right, like the government has laws and has the army and police to enforce them, and that's why the society, because the society, operates on law and order. When you have no one in charge, usually there's chaos or anarchy happening. But the historical order also kind of break at the international level, right? Because the United Nations, they don't have armies, they cannot enforce things. That is partially why we have this prolonged war in Middle East and in Ukraine. Because the global, on the international level, there's not really a government, there's not really a source of order on the international level. That's why I think blockchain is remarkable from 2 different aspects. First is that it's the first reliable order in human history that does not depend on any government. The second part that's remarkable is that it's probably the first reliable global order. It basically, it transcends all the countries. I think these 2 things together make the blockchain a very solid foundation to build the future of finance. And we can talk about this a little more because there's obviously a lot of reason to make the finance global, but there's historically has been a lot of challenge in doing that because you need a certain kind of reliable order to make any kind of financial transaction reliable. And this thing blockchain is reliable partially because it has shown to the world that it cannot be stopped. Right? Many countries has tried to control blockchain, try to either shut it down or try to control the access to blockchain. And it just doesn't work. So the blockchain as a technology has proven to us that it can withstand almost any kind of effort to put it down. The Bitcoin price continue to rise, right? It's a fact. It's not like a speculative. I think there was a time in Korea. There's a lot of people try to trade crypto, and of course in that kind of practice, a lot of people lose money, which is terrible because there's no regulation. There's a lot of crazy things going on, and the government tried to shut it down. Government just tried to say no one, only like very rich people in Korea can buy crypto. I think U.S. For a very long time, that's also the same thing. I'm not sure about now. In U.S., the version is accredited investor. If you are rich enough, then you are assumed to know more about money. Then you can buy crypto because this is highly risky, which is true. But then there's a massive protest in Korea by the young people saying that, you government, basically the governor in Korea are usually not young people, they're probably in their 40s or 50s. The young people just say, you guys, like in your 40s, 50s, you already made your money, you made a lot of money, now you are shutting our young people's ways to make money. You're preventing us from getting rich. That's the sentiment in the Korea protest, which forced the government to back down to allow people to trade crypto. That's just one example. I would say that's also partially, I think like some countries embrace crypto. Basically the beast cannot be killed, and it's also too big to ignore. So the only way you can do is to properly regulate it, to figure out how to coexist with it. It's gonna be part of the future. And the other thing we should we just talked about why the regulation is loose. In traditional finance, the regulation is a lot. There's a lot of regulation, how to do cross-border transfer, everything. But on blockchain, the regulation is very loose, right? Why is it very loose? Because there's nobody in charge. As we talk about, the blockchain is an order without any rulers. But right now, I think, just looking from a U.S. Standpoint, in the recent a few years, there's a legislation to regulate how do you use crypto. I think there are two aspects to this. One is that it's intentionally made loose so that it encourages growth. If U.S., for example, completely shuts down crypto, then the crypto innovation might happen somewhere else around the world. Other countries will capture the growth of crypto, and you can bet U.S. citizens will try almost every way they can to go to these other countries' platform, exchange to trade crypto. The U.S. essentially is missing out, right? So there's intentional to make it loose so that the innovation can happen. And the other thing is also, it's actually incredibly hard to regulate crypto. On crypto, there's no border of country. Like the wallet, you cannot say this wallet is US wallet, the other wallet is a Canadian wallet. There's no such border. So crypto is essentially, by definition, global. How to regulate crypto will take a long time to figure out. Just like the early days of internet, is also global. You can easily visit website from other country. It took the different country a very long time to figure out how do you regulate the internet in a way that is proper, that is not too strong. Also get things in check. That's why I think regulation is a very fundamental aspect of blockchain. Which leads to the first thesis of today, which is that global regulation is coming. Global regulation is that it's a kind of regulation that has almost never happened before. It's a regulation that is not enforced by any jurisdiction, but enforced on-chain by blockchain itself. At this moment, I think, so the blockchain already have its own regulation. If you have one Bitcoin, you cannot spend it twice, right? There is trust in scarcity on chain. People trust that, people have certain trust in the blockchain. It's just like the current regulation of blockchain is very, very minimal. There's almost nothing beyond the basic rule that there's scarcity and there's fairness. That's all. Like anything goes. You can almost do anything on chain. There's no regulations, no KYC, no KYB, anything. So, but that layers of regulation will inevitably come for blockchain to really to mature. And how does that come? That's an open question. It cannot directly enforced by a single country because there's no border on chain. So this is, but this definitely going to happen, which is also my prediction on what's going to happen in the next cycle, 2029 cycle. If the current cycle is RWA, the previous cycle is DeFi, the next cycle, I believe, is globally regulated finance that is a solid foundation to really percolate in people's daily lives. And the second thesis I want to bring to your attention is that I believe this is one of the greatest ways to understand why blockchain attracts people's attention so much. Because from a calculation, the money moves almost 30 times faster on blockchain compared to traditional financing banks. Partially because, I mean, previously we just talked about regulation, right? Now we are talking about why people want to go on blockchain. It's not, and partially of this velocity come from the new tools on blockchain. There are certain tools that just simply does not exist in traditional finance. I will talk about some of those. And the other is also because there's no geo borders. There no geo, like in traditional finance, if you want to go global, there's so much bureaucracy you go through. But in the crypto, there's almost none. So I wonder how many people know this thing, flash loan? Have anyone heard about this thing called flash loan? Cool, one person talk about it. So I mean, when we talk about blockchain, people usually think about Bitcoin, right? You own your own Bitcoin, that's it. But there's a lot more to blockchain than just Bitcoin. And the flash loan is one of the coolest thing I saw in blockchain. It really blows my mind. And I'm sure you all will mind as well. It's essentially a loan you can take with zero collateral. You do not need to put on anything to borrow $100 million. And you might ask, like, you know, what happens if you cannot return the money? I mean, the cool thing is that if you cannot return the money, then the blockchain will pretend that you have never borrowed the money. You know, you suppose I borrowed $100 million, then I use this $100 million to buy Bitcoin, right? Then I trade Bitcoin to Ethereum. Then I trade sell the Ethereum to get, for example, $102 million. Now I can, of course, return this 100 million as a principal. Then I keep the 2 million in profit. So that's great. But if I, after I sell my Ethereum, I only got $98 million. I cannot pay back principal. What should I do? The blockchain will simply say, okay, I will pretend you never borrow the money, 100 million, you never bought the Bitcoin with it, you never sell Bitcoin to Ethereum, and you never sell back. So the blockchain will cancel everything you did with that $100 million. And the key here is that, so you might ask why that's possible, right? I mean, it's made possible simply because this whole serious action will happen in a split second. So you cannot, you have to do this whole thing in one transaction. Either all of them happen or none of them happen. So you cannot borrow this $100 million, then buy the Bitcoin tomorrow. You cannot do that. You have to do this whole thing in a flash second. That's why it's called flash loans. You have to just borrow the money, do all of the trade, and pay back the principal in one shot. And in any time, in any part of this one, if you find that you cannot pay it back, then the whole thing cancels, as if nothing happened. Of course, you still need to pay the processing fee, which is probably only $50 at most. But the whole borrow just never happened. Just imagine in the traditional finance, if you borrow $1 million, you bought a house, you bought some food, but suddenly you cannot pay back. The bank somehow has a way to rewind all of that. You never eat that food, you never bought that house, the money you never bought. Of course, in traditional finance, you cannot do that, right? But on chain, by shrinking this whole thing into a split second, you can actually do that. And this is really cool, right? And in the block, on the blockchain, people do this all the time, maybe like hundreds times per second. And I think this tool contributed tremendously to why the money flows so fast on blockchain. You can just borrow money out of nothing, and you can arbitrage so much easier. If you see an arbitrage opportunity, you can just do it. You don't need to have principle. So when I first saw this, I feel like this is really cool. Just something genuinely new on the blockchain. It's not simply a digitized version of the traditional finance, which also in some sense requires the blockchain to be built on a lot more robust, because almost anyone in the world can throw $100 million at your business. And if your business is not properly designed, it can be very easily thrown off balance. So some of the blockchain attacks happen exactly like that. Because the attacker simply will borrow $100 million and throw at the business, and the business will behave in unpredictable ways, like have a really cheap or really expensive Bitcoin. Then the attacker can profit from that instant and just make a lot of money. So that has happened many times before, because I said I analyze a lot of blockchain attacks. A lot of attacks is done with this tool, and it even have its own name called flash one attack, which is very interesting. So that is one utility for blockchain, and the other one is no borders. This is something actually we are working with quite a few banks in New York. The bank, you might know that because you're all from financial industry, a lot of banks is trying to integrate with stablecoin to serve global customers. Because previously, without blockchain, if you want to serve like a customer in other countries with USD, there's unbelievable number of bureaucracy, process, regulation you need to go through. But if you integrate with stablecoin, you are global instantly. Suddenly you can serve anyone in the world, and this is such a big attraction to banks. We just get so many requests from banks to help them integrate with blockchain, with stablecoin. And if any of you is from a bank, you want to work with stablecoin, want to integrate, or just want to talk about it, consulting, we are all ears. We are very, I have my contact at the end of the last slide. I'd love to talk to anyone who wants to integrate with stablecoin and capture this really cool global finance opportunity. As another example, I recently also saw this interesting ad on TikTok. It says, it's an advertisement from a prediction market. It says, now you can legally gamble in all 50 states. Of course, I immediately caught by that line. It's another example that the blockchain erases borders. Because in US, like every state have its own gambling laws. Gambling is historically a little like a morally questionable business model, but it's also a proven business model, and it's heavily regulated. But blockchain kind of removed that border between states, and it's also part of the US is intentionally make the crypto regulation loose to encourage growth. And the local jurisdiction become less relevant, and of course there's friction, which is of course true for any kind of regulation innovation. So this is the second thesis. The third one, I think is useful for anyone who is interested in invest in crypto project, because in the crypto business, there are a lot of narratives. I have encountered many projects. I also done some myself, like a crypto gaming, crypto social network, crypto e-commerce. Like people tends to think crypto is the new internet. Like everything will become better if you move it on crypto, on blockchain. I don't think so. Like I mean, over many years of practice, I think that is not true. There are two arguments here. One is that money is the primary use case for blockchain. The other argument is that there will be a lot of like social network, gaming, or e-commerce related to crypto. but those are what I call money with 1,000 faces. All of those essentially use blockchain to modernize the financial infrastructure behind them. There are little incentive to use the blockchain to modernize the other parts, like the player experience or social network, other things. That's the thesis argument I want to make. You can roughly understand, like think about it as like for playing games, sometimes there is no scarcity. Like I can play anything I want. In social network, it's the same thing. Like I post a message, everyone can see. There's no limitation. Only one person can see. There's no scarcity. So therefore, I don't think the blockchain have a strong fit there. And this is lessons learned from many projects. Like VCs had poured like billions of dollars in like crypto gaming, other things, and learned a hard lesson that almost nothing works on blockchain except money. On the left side is a table comparing for different industry. You know, for finance, the traditional industry, traditional finance have a slower speed, not transparent, and also regulation, etc. There's a huge incentive to go on chain. But for gaming, you know, there's not much like when I play games on Steam or something, I don't feel regulation was or other pain points that much that can be solved by blockchain. The blockchain can probably let me really own my asset in game, which I don't think is not a big deal. And social network as well, there's some content moderation, bias, etc. But those cannot be really solved by blockchain. E-commerce, etc. The blockchain infrastructure is also not free. Blockchain infrastructure is actually pretty expensive to use. You need to pay gas fee. So therefore, if there's not a money problem, if you move your application on chain, it probably adds more friction than bring value. So now we're talking about the future. So in the future, my prediction is that blockchain will mature as a financial infrastructure. The more and more the finance will get on chain. Part one of that is the global regulation I talked about earlier. There will be other factors like trading, the logic to decide whether to give someone a loan or not. And there are just so many financial infrastructure that can be built around money on chain. And as a result of that, on-chain money will percolate into many different aspects, like gaming, social, all of that, of our daily lives. And businesses will integrate blockchain for money convenience, global and new tools, etc. I also think that to echo what I said earlier, I think one of the excitement about this global infrastructure is also to see how the global countries' jurisdiction will collaborate in a way that is that they can hold each other accountable, which might shed some light on how, for example, the United Nations should be organized. Because so far there has not been a really reliable way for people to organize on a global level. This is a slide for sparsity. We enable financial institutes to integrate with blockchain, and we build the necessary infrastructure when it's needed. Our moat is really very deep infrastructure expertise. We have been a leading voice. We have been a leader in blockchain infrastructure. We are working with the Ethereum Foundation, Sui Foundation, to design the future of blockchain infrastructure. And we're already working with some banks in New York to integrate with stablecoin. So if you are a financial institute interested in working with, integrate with blockchain, migrate to blockchain, capture this exciting regulation front, talk to us. So that's the last slide. Thank you for your time. You can add me on WeChat or email or on Telegram. I'd love to if you have any questions.
Can you go back to previous slides?
This one?
Just curious, what's that A16Z CSS stands for?
Oh, it's a crypto incubator by A16Z. Crypto accelerator. Any other questions?
I have a question about the flash loan.
Yeah.
If the whole circle has to be finished within a minute or in a fraction of a minute, how can you use that loan? Is it because it's so short of time?
Yeah, usually people, like one of the classic ways to use that is that you see an arbitrage opportunity first, right? Like, I mean, arbitrage opportunity usually just exists for a flash of second, like, well, because someone else, if you don't capture it, someone else will do. So you see that there's like a price inefficiency between the three coins, then you immediately borrow to capture that. So that's like one of the typical way to use flash loan. But you don't, I mean, you can definitely write a program to borrow the money and then think about what to do, but it's, people usually just like figure out the arbitrage opportunity first and then borrow.
So approximately how fast it has to be?
It's really just like a flash of second, because when you do that, everything else on the blockchain wait for you. So it has to be super fast. It probably just like a flash of second, like a 1 second, a fraction of a second. But like like a flash loan is always executed by a program, not by a human.
Yeah.
So the program also execute very fast.
So if I'm a borrower, I borrow the money, but I'm in the middle of the trading, the arbitrage trading, but I failed to return in a time, then I hold the asset because I already bought it, but on the other side, the whole transaction was ignored or
Yeah, it will be ignored. You will find out.
In a big trouble, right?
No, you will find that the money is no longer in your wallet. Because
that means the borrower doesn't have any risk and the lender doesn't have any risk?
Yeah, exactly, precisely. Like the only risk is you'll pay like a transaction fee, which is probably $50 at most. But none of them have any risk. That's why people use it all the time. Yeah, it's very interesting. Oh, yeah, so a little more about our collaboration with the banks in New York. So this is actually very simple. So today in a consumer bank, you can have checking and saving account, you can send or receive money, use the money to pay your credit card. I mean, the integration we do is that they can also do the same thing with stablecoin. They can receive stablecoin, they can send stablecoins, they can convert between stablecoin and the fiat, use stablecoin to pay the credit card. So it just allows them to do the same thing with stablecoin. And that immediately allows them to work with anyone in the world. I mean, that's just the first layer, but there's more product you can build on top of that. Yes, we exactly. KYC, like everyone still need to be KYC. Like there's no non-KYC business with these banks. Yes, yeah, totally. Okay, cool. Thanks everyone.